Welcome to this week's Nebraska Soybean Board Weekly Market Roundup. I'm Susan Littlefield. It's being brought to you by Nebraska soybean farmers and their checkoff. We are in Kansas City, Missouri this week. The National Association of Farm Broadcasting Convention has been taking place all week, and a great opportunity to showcase our farm broadcasters. And I got to give a real quick shout out to our very own Alex Wachowski. She was named the Horizon winner here at the convention. It's one of the top honors for a farm broadcaster that's been here within the last 5 years. So we're pretty darn proud of her. An interesting week in marketing that we saw this week is we take a look at what's happening in the corn, the beans, we'll look at the wheat. We'll talk about some basis issues. What are we going to see as we hit the month of December? There's only 1 week left to trading during this month of November, which I know is so hard to believe. Having said that, we'll take a spin on that as to what's happening on the livestock side as well.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
I'd like to welcome to the first time to our program. It is Troy Nelson and Eric Kruegar. They are with SmartYield. They are based out of Kearney, Nebraska. And gentlemen, let's start out with what's been happening on this grain complex. And Troy, I know that even though we finished on a Friday with some negativity, there has been kind of a roller coaster type of trade this week for grains.
Yeah, it really has, Susan. When I look at the corn market, comparing where we closed today compared to a week ago is a good little bit of a barometer to take a look at. Corn was down on the December contract about 6 3/4 cents from a week ago. January beans, however, were up about a little over 20 cents for the week. And then Chicago December wheat up 6 cents. Now, and that's just for the week. So you see some, there was a little bit of some resistance areas that we came into, and there was some selling, maybe a little bit on the latter part of the week. But we look at where are we at overall with these markets. And we came into about the second week of September on corn and beans and saw some contract lows put in. And so we're up considerably off of those contract lows. We've had world buying coming in against our markets. That's been a great benefit, and as well as strong usage also that we can get into some of those numbers too. But basically, we've really come off these harvest lows. And traded very seasonally here, although this week there were some challenges a little bit in the markets also.
Well, having said that, can you describe to us what some of those challenges have been?
Yeah, you look at the export numbers. We've had solid export numbers. Cumulative, we're ahead of about the 5-year average. We're currently at about 51.9% of the USDA forecast. 5-year average is about 41.6%. So we're well ahead of the average. Yet at the same time, we're also dealing with a 15 billion bushel corn crop that we're pulling out of the field right now. So it's an extremely large amount of supply on hand at the same time also. So you have those logistical issues with that large of a crop coming out as well. There might be some selling pressure at times, and you do see the funds coming into these markets as well on the long side of it here recently. But so challenge-wise, I think you have to look at some resistance numbers in the charts. There's some resistance on this corn on the December contract around 586. So we weren't able to penetrate that this week. We came very close, within a few cents. Once that somewhat we were turned back from 586, we did have a little bit of a sell-off here at the end of the week on corn.
Well, I want to ask you real quick, Eric, and we got some, I apologize, some feedback coming from your guys' computer a little bit. But Eric, when the livestock is looking at the amount of grain that's coming out, can we look at that as maybe some positive as we hit these winter months for feedstocks?
We hope so. We hope to see, use a break or a correction in the corn market to hopefully give us an opportunity to continually lock up our feed costs going forward. If we haven't done that already, that's something that we think is really important. It's imperative to do during the highest supply times of the year, which is usually through the winter into the spring. So any breaks that we do get in the grain markets, if you're looking to leverage and take care of some feed costs, we encourage guys to do that.
And we'll talk more about what's going on livestock-wise as we continue. But Troy, looking at the soybeans and the trade there, they've had some interesting pressure coming out of all the discussion of South America and this crop that we could see harvested as early as, hard to believe, 5 weeks from now.
Yeah, absolutely. It's a little bit early for large inventory to be coming out of Brazil by the end of December. That's a little bit earlier. Typically, you're talking January, but also, you're still looking at weather issues in that part of the world because they're right in the middle of their growing season also and finishing up on beans here. So it might be, comparable to late July here on our beans. And so we know weather's extremely critical at this point. So we are competing, and then you have to look at the direction and value of the real versus the US dollar, and that helps you determine how competitive we might be at this time or not to China as far as buying soybeans is concerned.
I wanted to look at this wheat market, and the March contract is kind of interesting. That what I'm trying to look at my side notes here is something like it's the highest March we've seen in over 7 years for March wheat.
Yeah, it's the highest since 2012, really, on the D's contract since Nova of 12. So it's been pretty incredible to watch this run that we've seen up through recent highs. You put it on a continuous chart, and it's been an unbelievable leader on the world stage as well. So we think that's going to be an interesting battle into the spring. You look at March wheat, you look out to July wheat, and what that's going to do as far as acres in the U.S. A lot of that depends on, Russia's getting some good weather, EU's getting some good weather for their wheat crop. But I think, as a world, those stocks use numbers are as tight as they've been for a while. So I think that's going to continue to be the front runner when we're looking at things over the next few months.
All right, for folks who are watching, we're at Nebraska Soybean Board's weekly market roundup. It's being brought to you by Nebraska soybean farmers and their checkoff. So let's look at the basis right now. We know that some guys are worried what we're going to see basis-wise, Troy, as we hit the month of December and start to wrap up 2021.
Yeah, and I think there's some concern with basis, of course, moving forward. What we look at is where is it at today and what are the opportunities? Right now, we're looking at some tremendous basis opportunities here in central Nebraska. That's our territory, is probably the middle 2/3 of the state where we're concerned about, and kind of south central Nebraska. And these basis levels have been good all through harvest. And even come into late August, basis tightened up tremendously here, whether it's in the feedlots, ethanol, or commercial grain. Basis has been very strong. And we've seen some movement with that through harvest, and it just hasn't backed off. It's been very healthy for the farm seller off the farm. Now, at the same time, that basis, you try to make a story out of that. Where does it take? Why is it where it's at? Where's it going from here? That's what we don't know. And so what we're looking at is what's the basis opportunity today, and where's it going from here? Now, there might be a play also out there if you're not ready to complete the pricing on that cash grain. At least look at that basis opportunity right now, looking at that Jan, Feb, March opportunities, because they're very good on basis, and we don't know where it's going from here.
That's the million-dollar question.
Absolutely. But there's opportunities right in front of us. And basis is really good. Corn and beans.
All right, Eric, cash cattle has been hot, and it continues to be so. Share us your thoughts.
Yeah, we saw really a bulk trade at 133 this week on the cash side. Highs here up north, 134 and change on a delivered basis, but saw the dress 208 to 211. Short week next week, so I think that's going to be a very interesting kill week. It's going to kind of slow some things down, but I think the trade still believes strong holiday buying ahead. Had cattle on feed come out this afternoon, really right in line with what the trade was looking for. The marketing number was a little lower than what they thought, so that could put a little more pressure maybe into November, maybe a few more cattle available for the packer. But I still think we're seeing that supply dwindle. We're seeing cash finally come up. The leverage has shifted a little bit. The packer has given up a little bit more of that margin, and that's kind of going back over to the feeder. And I think that continues here into Q1. We'll see what happens, but right now it's been very friendly.
Well, and I think it's interesting. We shouldn't complain for these cattle producers continuing for another week to be in the driver's seat.
Yeah, I think it's, you look at it, it's been a long grind. It's been a long time since we've started seeing cash levels up this high. The futures has already responded. So we've seen open interest come up. That's going to continue to help drive that. But I think another big kicker we had this week that happened that's been documented, not a lot of talk about it that you're hearing, but with a couple of mad cow cases down in Brazil, China banned imports, and that's going to put a lot more. We've seen a lot more, I guess you would say, export business to China. That's going to continue. There's some big suppliers in the U.S. that are looking to try and get Brazilian imports banned into the U.S. on some of that grind meat. So I think that all helps with better demand, and it's going to keep that story strong going forward.
All right, as we wrap up, what are we looking at or need to watch into a shortened holiday week next week, Troy?
Shortened holiday week, we take Thursday off, but their markets are open Friday. I think it's kind of a maintenance deal. I'm not sure why it's for the commercials or something, but there's not a whole lot going on the farm front when it comes to Friday's trading. So it's really a 3-day trade, in my opinion. I think at the same time, on the grains, we're going to see a little bit of potentially a little bit of pressure. I don't know if you see a lot of new contracts coming out and established through the funds prior to a holiday. We held resistance today and started to back this corn and beans off just a little bit. And I think maybe you could see a lack of interest next week, if anything.
All right. That has been this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. Just a reminder, commodity futures and options do involve a substantial risk of loss and are not suitable to all investors. I'm Susan Littlefield.